regardless of what happens here short term, I still think we trade up to here. And then I think this is really the key area for the entire chart, right? Like if you just look at this here, this is your point of breakdown, right? This was our floor at 30,000 here. Double bubble came down. Soon as we got below there, we puked 50%. So this is still technically a bearish retest. If we get up to this area, this can still very well reject and just be a bearish retest. We can also trade above it, back below. But my mindset is that this is a bearish retest. And I think of this, for a couple of reasons. One, this is the point of breakdown, right? The origin of the move down. So this is where you look for a potential lower high to form up in this kind of near 30K region. This would still be a lower high and a lower low, even if we came all the way up here. So this could go all the way up to 30, still be a bearish retest, make new lows. So it's hard to call the bottom is in until I think we convincingly reclaim 30K, reclaim this breakdown area, because then it becomes easy, right? If we start trading above here, pretty confident that that is the bottom and that's your risk. Exactly the same as this. Once we reclaim this area, there was your risk and you're just targeting upside, right? Seems like a clear deviation. So we could see a larger version of this below 30K and then back above, but we can come higher and then still trade lower. So you have to be aware of that. I think another reason why I think that this is potentially still, a bear market rally versus a just bottom and the market's bottom. I'm not trying to call it. I'm not going to be like, oh, I told you so, and I'm going to post on Twitter. It's more so, okay, if I have spot bags, which I do, and I know many of you do as well, and I bought some down here, bought some here. If the bottom is in, I don't want to sell these until new all-time highs. But if this is a bear market rally, you definitely don't want to round trip some fucking 6 spot buys on a 50% bear market rally. So that's why it's important, and that's why it's kind of tricky right now. And what we have to determine is what constitutes kind of the bottom being in and this being a new bull run versus this is just an echo bubble, a bear market rally. And I think things that are stacking up against this being the start of the new bull run is there's still a lot of uncertainty in the macro picture. I know a lot of people are trolling, being like, look, stocks went down and Bitcoin went up, or stocks went up but Bitcoin went up way more. The correlation has never been 1-to-1. It's just like the inverse correlation with the dollar. Everyone's like, look, dollar up, Bitcoin up, not correlated. I'm like, that's not how it works. Over a long period of time, the stock market and crypto are correlated. They're both risk assets. Over a long period of time, and in general trends, the dollar and Bitcoin are inversely correlated. There are going to be periods where that correlation is strong and when it's not as strong. And a super common thing in crypto is when stocks dump and Bitcoin doesn't, everyone tweets about how Bitcoin didn't dump and then stocks did, and then Bitcoin dumps twice as hard like the next day. I'm not saying that that's going to happen right now. I'm just saying for all the people being like, oh, like, fuck the macro, who cares? It doesn't matter anymore. It does still matter. So we still have a lot of uncertainty with that. And then we have the fact that it doesn't seem like there's the same level of participation in any of the moves. Yes, we're up. A lot of stuff is up, but volume, right, outside of Binance is not that heavy across the board, right? And a lot of these rotations between, the AI coins for a while and whatever the new hot thing is, the rotations are happening very quickly and they are not sustaining into any sort of kind of trend, right? Like we had DeFi summer where it was months of DeFi going nuts, right? We had the metaverse period where it was months of the metaverse tokens going crazy. We haven't really seen that. It's more like, hey, this week AI coins are popping. And then next week, it's going to be something new. So what that makes me think, and I don't look at the footprint charts, I don't look at volume very much or any of that kind of shit, but just visually looking at some of these moves, they seem to be rotating in and out quickly. And it seems to be smart players, right? Getting in, riding the wave, and then they are taking that liquidity elsewhere as opposed to long-term sustainable trends. So I think that also lends to the idea that this is just more of a echo bubble, bear market rally, as opposed to a new bull run. We're going to all-time high. That being said, I'm not opposed to us going to a new all-time high. Obviously not. But I do still think that it's time to be, just cautious, be aware. Hey, what's up guys? I want to take a quick second to give a shout out to the sponsors of this video, MLC, a media licensing company. So Media Licensing Company actually just came out with a new platform called the Media Industry Licensing Content platform, MILC for short. They do have a token associated with this, MLT, and they've got a lot of really cool stuff happening right now. But what the MILC platform is it is a live digital urban metaverse environment combined with a sophisticated social media platform and a new virtual content trading marketplace in which interactive user experiences and professional business harmonize in a completely new way. So with a focus on media and entertainment, so film, TV, publishing, music, gaming, art, lifestyle, e-commerce, the MILC platform creates an optimal content framework for an extremely broad range of users. MILC is a new generation 3D open web GL metaverse based on Unreal Engine, and they have unlimited user count and endless extensibility. So if you're interested in learning a little bit more, what I suggest you do is check out their website. You can check out their website at milc.global. Check out their Twitter, subscribe to their blog to get some new information. With that being said, let's get back to the video. I want to know, what is the most likely direction the next daily candle or weekly candle is going to go? And can I get on board with a trade that will allow me to catch that? Okay, that's kind of my entire MO. I look at the candle, I say, okay, what is the most likely direction of this next weekly candle? Personally, I would like to think that this trades to the upside, but you could say, okay, hey, we took out this high, we're now trading up here, maybe this low is next, right? So that's what you're trying to determine. Rather than trying to determine, is the bottom in, are we going to new all-time high? What way is this weekly candle going to close? Is it going to close bullishly, or is the high of the week already in and we're going to close this candle red? And if I can determine, or at least make a guess based on TA, which direction I think that is going to go, then I can go on the long time frame with that bias in mind. If I think that this weekly candle closes like this, so a red down candle, in this instance blue. If I think that this is going to happen on the low time frame, I want to be looking for ways to get short. So that's having your high time frame bias determined from the high time frame chart. I want to be looking for ways to get short. So if I zoom in here and I say, okay, I think the weekly candle is going to expand to the downside, I want to see highs getting run and then market structure breaking to the downside. And then I want to be getting in short and riding that down. But that's all I'm trying to do. What is the next most likely direction for the weekly candle? Okay, then what's this next daily candle going to look like? And can I get involved in some sort of lower time frame trade to ride that direction? You'll see a lot of SMC traders, smart money concept traders or ICT traders. They talk about DOL, draw on liquidity. That's everything, right? That's everything about my strategy is all about liquidity, however you want to describe it. I don't really care. More so for me, it's just like, okay, what is the most likely level to get tagged next? Is it above us or below us? And then I frame all of my decisions on the lower time frames based on that high time frame judgment. So if my high time frame bias is that we trade down this week, I want to be looking for reasons to get short on the low time frame. And vice versa. If I think my high time frame bias is like, hey, we're closing up at 27K this week, I want to be looking for lows to get run, breaks in market structure, and I want to be longing those for higher prices.